Hi guys, Henry here. So today I want to go over just very quickly two illustrations from Royal London PIMs just so you guys get a bit more information about what are the charges involved in this. We've done an example, we've sent it off to Royal London to get the charges of one was 7% commission, one was 0%. This is an example, so it may differ depending on your personal circumstances, and just for a caveat, it was on 500,000 GBP. So just want to spend the time just going through these illustrations to help explain it to you guys if you ever do get one of these from an advisor, just to know the charges, because a lot of them aren't too transparent, especially on the base cases. So I want to go about what is the lowest cost. We did this on a 10-year term. You do have different terms available from a 5 and an 8-year term as well. So just to clarify, this was on a 10-year term plan. So first off, we will go to the commission side one, and as you can see back here, it's 500,000. The cash allocation portion is 2%. It's 98% to invest. It gives you a bit of a kind of illustration here about what are the projected growth over that time of the period. I don't know if it's took in to consideration the charges and dealing charges of this. Probably not. I think it's just a more compounded growth calculator on this. So here we go into the charges. This is what you could charge before commission. So this is 7% upfront. A lot of advisors don't tell you this. They just say it's the base case. So the charges are 1% a year, and you've also got an admin fee of £400 a year. So for example, if you were to put 100,000 GBP, for example, which is very simple, you'd be looking at around about 1.4% base charge plus your dealing charges as well. Now, the exit charges, we've talked about this in a lot of bonds before as well, that if you were to take it out before the term period, again, this is a 10-year term that we did an illustration for on the Royal London PIMs. You can have different terms, you can have lower terms. On this, there'll be a 10% charge, and it goes down 0.25% every quarter on that basis. So again, if you are to, it's really for a kind of long-term investment because it is quite illiquid. Here again, just going down the dealing charges, that they give you 10 dealings free, and then it's £20 and a £40 custody charge. It's highly expensive. Again, if you compare it to the platforms that you have these days, where it's basically free trading, and here you're looking after your 10 free trades, probably looking at around $100 per trade. That's excessively expensive. So we've gone on a lot of topics about who should look at bonds, etc., in other videos and blogs, but today I just want to kind of undercover some of the costs, because I don't think there's a lot of information out there on costs, on the base cost and the commission, because they've usually been kind of hidden behind a lot of commission, and there's not too much transparency about it. So we've just switched over to the non-commission one. Same example again, 500,000. Allocation rate is 2% cash, 98% investment. Again, same predictions, etc. As you can see here, the establishment charge, this is where it mainly differs. Instead of the 1% you are paying, that comes off in the advisor commission. This is 0.067%, significantly less. You still have the £400 or currency equivalent service charge. So again, this is what we spoke about in a lot of the blogs and a lot of the videos, is only look at an offshore bond option if you can afford, say, 250,000 US dollars bare minimum, and looking at a long-term investor and looking at these dealing charges, not looking to deal very much as well. Again, if you look at the exit charges here, it comes down 0.017% each quarter, because there's a lot less exit charges than, say, 1% a year that came into it. So again, this is a lot more flexible option compared to the 1% a year coming down in the surrender charges, exit charges, however you want to phrase that, and the costs again 0.06. So for example, if you have 100,000, it's going to cost you around 0.5%, 0.445% if you include a few dealing costs in there as well. So it becomes actually quite a viable option if you've got, say, 250,000 plus using the tax advantages on it, and you are using it at the base cost, and you're probably not doing so many dealings. Probably, say, if you do 1-2 dealings a year, for example, this is where offshore bonds can really come into its element. Again, we spoke about a lot before. If you're going back to the places like the UK with the 520 rule, Australia with the 10-year ATO rule, that's when it comes into its elements. Again, the dealing charges are the same, and the dealing charges are the same with this. So again, you're looking at £60 after your 10 free trades on the dealing charges. So I hope you found that useful. It just goes over, so just to clarify again, some of the charges on the commission, once we take 7% up front, it's 7% is 1% a year plus your 400 admin charge. And the exit charges are 1%. When you compare that to the non-commission, this is on 500,000 on a 10-year term, both 10-year terms, it's 0.067% and £400 GDP. Hope you found this useful, and hopefully it's given you a bit of an insight into what are the base costs and the commission costs on some of these offshore bonds, because they have been quite not too transparent about the charges. So I just want to go over and clarify that.